Good afternoon, everyone. My name is Tanya Subatang, Membership Manager for CFA Society San Francisco. I want to thank you all for joining us for part three of our four-part career development series with Kristen Schriver. Today, on our virtual workshop, we'll talk about using your finance industry expert to further your career beyond the traditional roles. Kristen is the owner of Investment Management Recruiting. She has over 20 years experience in investment management and consulting industry. Please join me in welcoming Kristen. Hi, Kristen. I think you're muted, Kristen. That's okay.
Okay, we're back. We're good?
We're back. Yes.
Okay,
Hi.
fantastic. Hi, thank you so much. Okay, everybody, welcome. We're going to talk about career transitions today. I'm going to divide this into a couple sections. I'm just going to start by addressing the strength of the CFA today, and then in the second section, I'm really going to kind of dig into how you really dig in and get organized and make that shift for yourself. So I'll pause after the first section. I love it when you guys ask questions. It's easier for me. I love to hear what you're thinking and what you want to talk about. So we'll do that. So please ask whatever you want. Okay. So let's address the strength of the CFA today and how it's viewed in the market. As you consider your career options. The industry, from my perspective, has plenty of CFA talent, and I'm never usually without a CFA candidate to put forward in a search if that's what the firm is seeking. Firms do value that CFA. It's really become a weeding tool. It doesn't have that same wow factor that it used to have. It's sort of almost more expected. So the candidates without it have really become kind of second string candidates, regardless of the amount of experience that they have. So that's just sort of, kind of the way it is right now. We are seeing a greater number of younger candidates jumping on the CFA right out of college. Maybe a little bit of the problem is they don't quite know how to use it or don't have a ton of direction. I end up having a lot of conversations about how to focus their use of the CFA today. And a lot of those discussions are about how I see the importance of sector specialization. And I talk about the alternative side of the business a lot because there's a lot of growth on that side. And then that sort of leads into, have they thought about the wealth management side of the business as an option, since that is such a growing, robust hiring space right now. And we're going to kind of talk more about that. And I really do tell candidates, I don't get any calls anymore for firms asking us to find large cap growth or value analysts. All the CFA roles we get called for are more specialized positions, more alternative focused, and many now sort of wealth management focused. So I guess we're talking with more CFA candidates than ever, trying to shift into other segments of the industry. And, we can kind of ask the question, why? There's some of these traditional trends you all have been seeing, just investors moving into, those low cost index funds. There hasn't been the same demand for some of the active management products. We've seen, kind of an implosion in the large cap growth and value space. Some of this can be due to poor performance or retiring staff, consulting firms just kind of pulling the plug. As a result, we have seen some staff, trying to relaunch new funds, reinvent themselves. There has been a bit of that. Okay, we look at how, folks are doing after 5 years. There's, some folks that are hanging on, with a small pool of assets. Some are struggling in, raising, money for funds. So that's, kind of normal. We see some of the institutional firms kind of rethinking distribution. So where there had been, a lot of hiring around external marketing people with CFAs, we've seen some compression in that space, a bit more reliance on those internal marketing staff folks. And we've even seen consolidation across the retail and the brokerage space. Baird, for example, pulled the plug on a couple of satellite offices that had robust investment teams, and they consolidated those folks into home office. And we saw people that didn't want to relocate and wanted to stay in their own markets and try to figure out how to reinvent themselves. So we even see kind of some of the large brokerage teams that built investment product in-house, and they're moving to more RA platforms. So more focus on those advisory services. And now I haven't, this is the issue of AI or artificial intelligence. This has kind of come up for me, candidates wondering if their roles are being displaced from technology. I haven't seen this specifically. None of the firms I work with have told me they're downsizing CFA staff due to technology enhancements, nor have I had a candidate tell me their job got replaced by technology. So I haven't seen that in a real application. I have seen consolidation across operations when there's been technology enhancements. Definitely seen chief technology officers kind of work themselves out of a job once new back office infrastructure kind of was put into place. So kind of let's talk quickly about where candidates with CFAs are switching directions the most. The three most discussed on my end are wealth management, moving to fintech, and maybe even sliding over to the corporate space. There, we do see folks, this has always kind of been the case, you get some experience on the buy side, you want to go, sell side, I mean, and you want to go over to the buy side. We get young people in operations roles like, portfolio analytics, accounting that are working their way into investment roles. And of course, we get research people that want to move over to biz dev and investor relations, product specialist roles. And we see some, stock picking folks that want to go over to, manager research. But most folks look at, wealth management in fintech. I have that conversation the most. Of course, in some robust, technology markets, if you look at, Seattle with Google and, Microsoft and Amazon, there are a lot of investment related roles connected with some of the treasury departments, and we're seeing candidates jump over onto that side and use their CFAs. So that's definitely depends on the market that you're in, but we can see the corporate side coming into play depending on geography. And so, all of these are, viable options. We have seen candidates successfully move over to all three. I want to address the wealth management space a little bit because that's kind of the number one kind of hot button. And we've placed multiple CFA candidates into wealth management firms this year. Wealth management firms are growing their investment departments more than ever. A lot of the larger RAs in particular and the multifamily offices need more alternative investment backgrounds. Their clients have more real estate holdings and hedge funds and private equity holdings. And so that's becoming quickly a growth space. A little bit of the difficulty for folks that have been kind of on the institutional or direct stock picking side is that a lot of these RIA firms want their investment person not only to sit on the investment team, but they want them to be client facing. So we find a lot of these roles have a hybrid function, and this kind of throws the CFA candidate, a bit. Typically what's happening is that the client has a two-person team, so some kind of a CFP or wealth advisor that spends their time, building the wealth plans, having that initial point of contact with a client, and some of their time is business development, and then that function gets paired with a CFA kind of client portfolio manager that provides and discusses the investment solutions to the plan. So that person really does need some good client facing skills, and sometimes there's that learning curve because I'll get CFA folks that are like, oh, hey, I really want to go over to wealth management. I can just as easily talk with a high net worth investor as I can, an institutional client. But the problem is that as soon as these kind of tax related and estate planning needs come into play, and now we need to solve that client's issues with investments, some of the CFA candidates are stuck a little bit not having some of that language. And so there's a learning curve there. But the RIA firms are trying to become more credential heavy. So they really want the CFA for their clients. They want to be able to advertise that they have that. And I'm seeing for the first time, I'm starting to get requests for the CAIA. So again, that alternative sort of focus. So if somebody pairs that with a CFA, that's becoming quite valuable today. So I would say too, if you have an institutional background and you've never advised high net worth clients, layering that CFP is really important, even if you're not, going to be on the heavy advisory side with clients. But what it does is it shows that you're willing to make that commitment for yourself over to the high net worth side. It shows you're tracking your career in that direction. You're getting ahead of the competition, and more importantly, you're giving yourself kind of the knowledge to work with those high net worth clients. I know that if you have your CFA, you can kind of fast track your CFP. I don't think you have to sit for I think there's 6 modules you have to sit for, and you don't have to do that. You can just go take the CFP exam. But of course, you're going to have to get prepared, and you're probably going to have to study to get through some of that material to make sure you're prepared for that test. Let's see, then there's one other kind of thought on the wealth management side as you consider finding opportunities. I think kind of adapting geographically is important. Really consider where the fastest growing cities are that are being driven by tech, because we're finding that where tech is going, wealth management is moving forward. So, Austin, for example, there's a lot of tech in wealth management is following out there. We're seeing a lot of growth in that particular market right now. So, one of the things that's happening too is as tech moves into a market, we get traveling spouses that have investment backgrounds that are trying to kind of reinventing themselves, layering themselves into that market. And so there's some interesting strengths that are moving into some of these communities. So, okay, so I want to just break there. I just wanted to address trends that we're seeing in the CFA. Let me just know if there's any questions there before I really jump in and talking about kind of action plans for switching directions.
Kristen, we have one inquiry. Can you repeat again, you mentioned layering when it comes to wealth management. What were those other designations that you encouraged for them to get in order to layer their current CFA?
Yes, definitely the CAIA, so the Chartered Alternative designation. So really having a strength on the alternative side of the business, because I think, most of these firms and these clients have had somebody come in and do kind of the asset allocation and kind of layer up those traditional asset classes, right? But now what's happening as the assets of those clients grow, and most CFA folks can work right on the more sophisticated end of the market. So your skill set's going to be wasted if you're, kind of just mom and pop, talking with somebody that's got $1 million portfolio. So you really are looking for some of these RA firms that have $5 billion and more, where you're managing a client's assets that have, $5 million or more, $10 million or more. So we're really looking to embed CFA candidates in the more comprehensive part of the wealth management story. And a lot of these high net worth or ultra high net worth individuals, they own real estate. Or they own private equity, holdings. They have hedge funds. They're a more sophisticated investor in general. And so wealth management firms want your CFA designation, but they also would love to have you be well-versed across the alternative side of the portfolio. And then in addition, that CFP, which is the Chartered Financial Planner designation. And like I said, it's not that you're going to become the CFP person, but you really need to understand the wealth planning side, right, of the business. You have to understand the tax implications to a client's portfolio. You really need to understand sort of the estate planning needs that these clients have. You're going to work closely with that wealth advisor in the firm, but you have to layer on that, that language for yourself, so you're not kind of caught, right, not understanding that, especially when you're interviewing. Because if you interview and you're like, hey, listen, I know how to pick stocks, or I can do asset allocation, but the second someone's like, okay, well, we've got this $10 million client, he's got all of these holdings, and you're like, not exactly sure how to solve the tax implications of this plan. I'm not really sure how to discuss the estate planning needs. you're at a disadvantage to other candidates that are interviewing. And it's kind of why I said, listen, if you get on that CFP, just having that designation is kind of the, the golden ticket. Firms will understand that you're really applying yourself towards the wealth management side. You're investing in yourself to take care of that language. And then when you interview, it's so much easier, to interview if you can sort of start rattling off these concepts, show that you really understand them, show that you really do know what it takes to manage an ultra high net worth portfolio. Okay, yeah.
That's the question we have so far.
Okay, perfect. Okay, good. So, so let's kind of move forward and talk about really putting this action plan into place. You really have to get real on what it's going to take to make a change. And I am going to tell you, you have to define your direction. You have to know what you want to be in the next step. And I'm going to talk about at the end why it's, if you make this change, it's very difficult to go backwards. So you want to make sure there's a ton of intent, that you've done your research, homework, and really make sure you can exactly articulate why you want to make this change in your career. So, and the only way you can really define that is to do your homework, right? You need to have as many informational interviews as possible before you make a decision. So if you're thinking, I know that I've had some colleagues go over to Fintech. I wonder if that would be a good fit for me. Well, the second you start interviewing for a real position, you might get an offer, and you may not 100% know if that's what you want to do. So before you get any offers, you have to know if that's what you want. So really look at, if you're like thinking, okay, I could go wealth management, I could go Fintech, I could go, corporate, make sure you're really having as many informational interviews as you can. Really explore what the day-to-day reality of those jobs are. I would say do an exhaustive research of, use LinkedIn, use your network, really research anyone with a CFA in that segment of the industry, right? Because most likely if somebody's got a CFA and they're in Fintech, they probably came out of sort of asset management. So, you really want to kind of ask that person, how they originally built their career, why they went over to Fintech, what they love about Fintech, what they hate about it, and really kind of ask what the day-to-day reality of that job is, because you've got to have, right, you've got to have this massive arsenal of information for you so that you can learn what you like and what you don't like and make one of these really solid decisions. And, I think sometimes what happens, I see a lot of people go through these exercises and then they're super happy they did, and they find out that they don't want to make a change. So, and they fight and do everything they can to stay where they are. Right. So, so you just absolutely have to have that clarity. So I think if you're going to do informational interviews, like I said, you might want to pick various segments of the country to find some of these firms. Don't be afraid to reach out. People are more generous with their time and input than you think, especially if you show interest in them, their career, acknowledge something that they're doing professionally. I absolutely think it's okay for you to, to say, hey, listen, I'm considering a transition to Fintech. I see that you were able to do that. Would you be willing to give me, 15 minutes to tell me why you decided to head in that direction, and answer a few questions? And I bet you anything you'll be able to get quite a few people that would be willing to have those conversations with you. So once you get kind of really clear, on, what you want, you've got to be able to put it in writing. I think if you can't write down exactly, what you want and why you want it, then you can't sell it in an interview. So I think that's super important. So, and then once you can really define that, then you need to, figure out what it's going to take. Like, are you lacking certain skills that you need to be attractive in the interview process? And just like we talked about, do you need some additional certifications, any classes, licenses, back office skills? I would encourage you to be proactive. Don't expect the firm to sort of pay for that and support that, because you're already probably coming in as a fairly expensive candidate because you've been successful in something that you've done, and then you've got your CFA, and now you're trying to make a different type of move. And it's hard to go in and say, hey, listen, I'm willing to get my CFP if you pay for that. It would be much better if you said, listen, I'm halfway through the CFP modules. And I'm going to be ready to sit for that, that test, and the firm might be willing to continue, to finalize and finish out supporting some effort that you put in on the front side. So, you might have to make that front end investment, and I think you should. If you, I think you need to ask yourself if you can take a sideways step compensation wise. This tends to be what trips people up the most in making a career shift. I find that, if you're going to go to wealth management, sometimes compensation doesn't keep up as much as in asset management. And the way wealth management firms compensate is different than the way wealth management firms do. So you really have to kind of look at that base salary, those bonus structures, and how the upside trends. And you may even say, gosh, I can't do that, right? I can't take that type of compensation sideways step. And then you should ask yourself if you can relocate. Giving yourself more, flexibility around the country obviously helps in terms of your opportunities. So, but I said, for me, it's invest in yourself up front, really, before you start to tackle the job market. And I think if you're doing, what I said, doing your homework, knowing your direction, figuring out what it's going to take, then right, we're way ahead, right, of other candidates that are interviewing. So the other thing is, I think it's super, super important to really turn yourself into a temporary salesperson. I know this is kind of tough in the market, right? We tend to put ourselves out there, and then we get some rejection, and then we're like, all right, you hate that, right? And we all do. It's really hard when people don't return calls, or you have a couple interviews and maybe somebody doesn't get back to you, or you don't really understand why you're not moving through the process. So when you are a really good kind of business development, sales, and marketing person, you look at it from a statistical point of view. And I think it's important to kind of have that mindset. It takes a lot of inquiries to land, a certain number of informational meetings to eventually, secure real interviews. And I think that takes, sitting down. I mean, I know when you're working, this can be challenging, but I think you should treat it as a full-time job, right? You should be, at your desk at 9 and, maybe till 3, you're 100% working on your job search, because it takes that kind of effort. You want all of those steps to snowball and give you momentum, so that you can shift direction, because shifting direction isn't, super easy. You've got to put some time into it. And so if you can kind of track your metrics, not take it personally, realize that part of this is a numbers game and that you create your own luck. I think it's important to view your job search that way. Okay.
Kristen, while
Yeah.
you take a sip of your tea,
Yeah.
We did have a question come
Great.
in.
Great.
So curious how compensation levels and structure compare on the wealth management side versus on the institutional side.
Yeah. So the wealth management has a couple different structures typically. There's base salary, of course, and then there's one or two other pieces to this. So either there's just a bonus structure. Bonus structures can be all across the board, but they're typically 50% and under. I see a lot of firms in the 20, 25 to 35% as a bonus metric. So we just don't get these 50 to 100% bonus metrics, because there's no, right, we're not being paid on the growth of an investment portfolio. You're basically kind of paid on assets under management of the entire firm. So then there can be a third component, which is commission-based if you're driving referrals or new clients into the firm. A lot of firms have a two-tiered commission structure, meaning that if the client is coming from a referral source from within the firm, it's a lower percentage. And if you're driving a new client into the firm, it's typically a higher percentage. So really, when you start to see folks really pushing what I would call, $300,000, $400,000, $500,000, $600,000 in comp, it's all really coming from new clients, new assets, new revenue versus investment performance. And so at some juncture, as you get more successful in wealth management, you kind of want a firm that can give you some of that commission related structure, because you want to be able to ask your clients for referrals. People are going to start to know you, that you're on the wealth management side. They're going to know you're doing a good job for clients, and new clients are going to come in. So I think that's important. I love seeing a 3-tiered metric. You may not think that you're sort of a business development person, but it's not really a business development metric. It's really just referrals, new clients coming in the door, and you want to kind of participate in that upside. Some of these firms are tiered in terms of titles, meaning that you can get, just like a lot of firms, associate, director, managing director, and a lot of times the bonus percentage, starts to increase as your title increases within that firm.
Great, thanks, Kristen.
Okay. Okay. So now we know the direction, right? You know what you want. You've got this action plan in place. Now we need to make it as obvious as possible, right? So now we get into the resume and the cover letter, and you want to, adjust that so that you look like a really good fit for the role you're applying. At least look like you know why you're applying, right? Because your competition's going to look pretty good on paper, especially if they're already in fintech, right? They're going to look more natural, but we want you to be able to present yourself in a way that seems like a logical fit. And so first, what we need to do is decipher that position description, right? You've really got to take that position description, and I call it redline it. You get rid of everything that's fluff, right? Good team player, good written skills, all the stuff. You've got to get to those 3 bullet points that the firm can't live without, right? So, and you're going to look slightly sideways, right? But with all the homework you've done, right? Because you've talked to 10 people in fintech now, and you know exactly what the role is, the day-to-day duties of the job. And there's going to be something about your background. There's going to be a reason why you think that's a good fit for you, right? It's not going to be this arbitrary decision. You're going to say, God, yeah, I can do this job. I'm really motivated. I really like the way this sounds. This is what I really want to do. Since you're going to have written that down, you're going to know it for yourself. You're going to be able to put that in a cover letter. And I think it's really important for you to say, listen, I've spent the last 6 months, talking with a variety of people within fintech. This is what I've learned. This is what I've done for my career. This is why I think I'm a good fit for your role. I haven't done this exactly, but this is what I have done and why I think it's a fit. So you've got to create some arrows for them. Pick 3 things that are in your background, pick 3 things that are in the position description, and make it clear what it is about something you've done matches something that's in that position description. You've got to connect those dots for somebody that's reading your cover letter and looking at your resume. Because a lot of people, if you don't do that, somebody's going to go, I don't quite get it, right? I kind of see it, but I don't quite get it. And well, I've got these other candidates that look good. So you've got to sell it. You've got to translate it. And show that you've actually spent a lot of time considering this direction. So, and I think if you can do that, then, when you get into that interview process, right, then we can sell it, right? We can have a really nice conversation about everything that you've done and all the research that you've done. Somebody's going to really appreciate the time that you put into it. They're going to know that if you head down this path, you're not going to be unhappy 6 months, 90 days, right? Or even, 2 years or less. I do see this happen, right? Where people have made a switch and they're like, it wasn't what I thought it was going to be, or I can't make the kind of money that I thought I could, or God, I really want to go back to what I used to do. I am realizing now that I like that better, right? And so we want to avoid that type of, situation, coming up. I think when you have the chance, to interview, I did talk with somebody that made the switch over to Amazon, and kind of checked with him and asked, how it was going. And he's like, oh my gosh, he's like, it's like my old job on steroids, right? Like he's so connected into this crazy new life at Amazon. And I think you really need to understand as you interview, is it right? Is it exactly what I want? Is it the lifestyle I want? Is it, what is the time commitment? What is happening in this role on a day-to-day basis? Because you need to make a really, really solid decision. And I wanna go through with you why this is so important, because if you switch directions, it's really, really hard to go back to what you were doing. And a lot of that is firms will take the approach of, oh, you weren't happy, right? You made a job career change because you didn't like what you were doing, and now you're telling me you don't like this, and now you want to go back to something that you didn't like. It's just a very difficult platform to defend yourself, right? So so I want to review, first of all, just some of these obstacles, right, in switching directions, just so that you kind of know how to deal with them. I will tell you that firms don't want to train. And again, this is why I'm kind of telling you to get on top of credentials and invest in yourself, because, I would love to say that firms will hire for competencies over skill sets, but at the end of the day, if somebody's got a skill set, right, it's just easier for them to do that. So really do get on top of as many of those credentials and invest in yourself as you can. When you're working with a recruiter, and this is the challenge for me sometimes, is that when the firm gets to me, oftentimes they've, tried to go after the job search themselves. They get to me because they're like, okay, we got stuck, we need some extra help. And really they're paying me for exact matches. So sometimes the challenge for me is, I can try, right? And I do sometimes submit candidates if they can really show me that they've done the work, how they've really positioned themselves, because I have to sell you and I have to justify why I'm putting you in the search. So you have to help me, right, and do that just as you would for yourself. It's good to use recruiters because, oftentimes I'm giving you more time, right? Because I see something, I want to be connected with you to understand your job search and what you want to do. And if you say, hey, listen, absolutely 100%, this is my direction, I know this is where I want to go, then it's easier for me to sell you to the firm sometimes than it is for you to do that by yourself. So I think it's great to connect with as many recruiters as you can, have as many in-depth conversations as you can. And that way the recruiter has greater leverage to try to squeeze you into a search. I would say, firms hate seeing jumbled resumes. So again, this is, why it's so important for you to have direction. Companies don't want you to be bored in their role. They don't want to see you start lobbying for a different position than where you got hired, right? They don't want to take the risk that you'll jump ship, right? Trying something new again because you're unhappy. And you don't want to have this exhaustive kind of interview process, kind of defending, right, these ebbs and turns that you've had in your career. I think it's okay to do it when you're younger. Like if you've said, listen, I was young, I tried these 3 things, and now from that, I know I want to do this. But having a, kind of a convoluted resume is really, really challenging. I've talked to a lot of candidates that have struggled a little bit in finding their path, and they've got a lot of 2-year nuggets on their resume without those good solid 5-year nuggets. And that's really what you're trying to get later on as you're more tenured. You can have kind of these 2-year turnover things when you're younger, but as you really start to solidify your career, you really want to have some of these really good solid time blocks sort of where you are. So again, kind of the switching directions, if you're going to switch directions, you make sure it's a solid move, make sure that you can get a 5-year nugget on your resume, not a 2-year one looking for another path. Again, same issue of if you really, want to change directions, be able to communicate can have a lot of conviction in why. Okay, so I'm going to pause there and see if you guys have any questions about cover letters, resumes, kind of the plan and sort of making this all happen.
Kristen, we got a question regarding the ESG certification and the importance of having that. Do you think it's something that companies are more and more looking for?
Well, I would just say, if you see something like that in a position description, so again, you're going to have this block right in that position description that's going to start listing out some of these technical skills, these desired qualities that they want. Some of these roles, the firms are like, hey, listen, you can apply for this role if you have this, but in an ideal world, if we have candidates that have this, right, they're going to gravitate towards those candidates. So you just have to decide for yourself, is this credential getting me the job or the position that I want? Is it valued by these types of firms? So none of these whatever you decide to get for yourself, they're all good, right? They all layer on your knowledge and education. Every industry is, slightly different in what they're looking for. I will say that, the CFA and the, CFP or the CAIA, those are kind of the gold nuggets now, the gold standards, right, in credentials. You can't have, like if you just have the CAIA, but you don't have the CFA, it's not as good, right? So you have to, hopefully, the folks that have CFAs are already in a good, solid position, right? You've got the best one. Now you just kind of got to layer on some of these other little things that are related to the direction that you want to go. So none of these credentials are bad. You can go after sort of any and all of them, as long as they're applicable, right? And you can justify why you went and got it.
Perfect. We have another question that says, for resumes, 1 page versus 2 page, especially for someone who is more senior in their career,
yes,
who has more to cover.
Yeah, I think this is a good question because I never, ever read 1-page resumes anymore. So you are safe to have a 2-page resume. I would say try to keep it to 2 pages. Once they get to 3, they're kind of getting wordy. Usually a 3-page resume, I've just got way too many bullet points. So one of the things that you can do if you're, and then what happens with 1-page resumes is that, and you've got a lot of material, is that you start scrimping, right? You're like, okay, I'm going to push the margins out and this way, and I'm going to use smaller text. And so I would not encourage you to do that. Everything looks too bunched up and crammed up. So really keep it to, 2 pages. If you find that it's going to 3 pages, what I really see is that, again, candidates have too many bullet points. So what I do when I'm helping somebody with their resume is that I take all the, I'll take a big section of bullet points. I usually always find redundancy. So what I would tell you is start grouping like bullet points. So for example, if you've got things that are operational focused, or if you have bullet points that are not kind of day-to-day, but more project oriented bullet points of things that you've done, just put those in a section. So as you start grouping kind of topics, you'll find often that you can get, you can start getting rid of stuff because it's getting wordy, right? And then you don't have to list every single solitary thing, right, that you've ever done within a firm. So, especially with, jobs that you're applying for. I took like a 4-page resume for somebody not long ago, and we put that down to 2, and we got rid of a ton of stuff because it was just not applicable to the position for which she was applying. And honestly, I was worried that the firm would be like, oh my gosh, she's done all these things. She's going to think our role, isn't comprehensive enough for her. So we really tailored her resume because she had absolutely identical experience to what the firm was looking for. She just had all this other stuff too. So we really slimmed it down to make sure it matched exactly what the position description was looking for. And she totally got an interview for it, and they had no idea that she had all this other stuff, right? And then she didn't have to kind of talk about all that, defend that in the interview process. So really make sure your resume is what I would call reader friendly. When I write resumes for people, I like to have a big picture. I typically talk about having that nice summary section. It does not have to be long, but it does have to give the reader okay, what's coming in the resume. Think of it as kind of the thesis, right, to what's coming. I really like to have 1, 2, 3 sentences after the company name that says, this is the type of company I work for. Because, let's face it, some names are very, everybody knows the name of the firm and somebody can get a really good picture of what you do. But there's a lot of smaller firms out there. Or let's say you work for BlackRock, for example. Well, BlackRock's a really big company. So it's really important that you define the division within BlackRock that you work for. So you can say, well, BlackRock's this, multi-billion-dollar firm. I work for, this sort of hedge fund group. So the reader gets a really clear picture first on the type of firm and group you work for. Then we get to your title. I like to see 1 or 2 sentences about your title. So somebody has, okay, this is the overarching responsibility I have within this team. And then we get into the bullet points. And you really don't need more than 6 bullet points, right? So if somebody's got the big picture, they understand what you do day to day, and you've got some really solid bullet points, you don't need 20 bullet points. But I think you do want somebody to have a clear understanding of who you are. Again, if you have a position description, and I think too, like if you're applying to a State Street Bank or even an Amazon, a lot of these companies are using screening technology for their resumes. And so you have to have exact word matches. So look at that position description again, make sure that you're incorporating as many words from that position description as you can into your resume, so that if any screening technology is used in these really large organizations, that you're getting flagged as a potential candidate. And then again, with smaller, if you work for a very small firm, I think it's important to say, listen, we manage this X number of assets across these strategies, because you want to give the reader that quick understanding of who you are.
Great, thank you for that. We have another question that says, I'm 2.5 years into my wealth management position with my current employer. While I would like to get the 5-year block on my resume that you mentioned, I feel like I can improve on my $85K annual salary plus bonus after I complete my CFA next year.
Mm-hmm.
What would you suggest?
Yeah, absolutely. If you're like getting to the point where, again, and I think the last lecture we did kind of really spoke to how you ask for a raise, right? So you need to line things up. What I would tell you is, start interviewing. You really do. If you're not competitively paid in the market, if you've got a credential, you really should not stay in a low paying job. It actually works against you, right? Because if you got 5 years on your resume and you were only like 85 or 90 and you had your CFA, it's that starts to work backwards, right? Some firms are like, well, why are you working for this low wage, right? So we're ready to bump up to, 125 on your salary. So what I would tell you is start interviewing, secure a position, ask your firm to match the offer if you want to stay with your firm. If they do, great, you're moving up the ladder within your firm, you'll get that 125 base, you'll be able to say, listen, I got my CFA. Sometimes I've talked about this before, where sometimes firms, they get stuck in this like parent-child relationship, right? You came in as one thing, but they have trouble seeing you as this new enhanced version of yourself. So you almost have to switch jobs sometimes to get the, to have earned the new knowledge and the credentials that you have for somebody to see you differently. So that's just part of it. Totally fine if you end up with 3 years, 2.5 years, 2 years. I do tell candidates to make a move if they're underpaid.
Great. So Kristen, another question. Areas like private equity always list prior experience necessary, obviously desirable, but is it a mandatory, and how do we address this?
Yeah, so private equity, I see a lot of firms, they don't even require kind of the CFA, right? So a lot of this is, and I've got one company right now, it's more kind of real estate focused, and they're looking for kind of a hybrid kind of analyst in that position. And what I would tell you is that they really are analyzing, right, these deals, these companies, but a lot of times the CFA function that you've learned, a lot of that isn't applicable sometimes to the way companies are being, these transactions are being valued. So I think private equity is great, right? The comp can be really good in private equity. So your CFA can't hurt you in that respect. But sometimes when I've got candidates in private equity, I can't move them right over to the CFA side of the house. They just don't have the skill set for it, but I can always kind of move a CFA candidate over to the private equity side of the house. If that makes sense.
I think that's all we have for questions. If anybody has any final questions, we have some time. So this is your moment to ask, Kristen.
Exactly. So I know it's really kind of interesting, right? Trying to kind of evolve your career in a, a different direction, because you've got this great skill set. And I would say that, if you have a position, I don't know. I think this, what COVID has sort of taught us, and, a lot of firms now are really understanding that they don't have to have candidates in the office the same way. We're seeing candidates have more leverage today on this conversation. I have some firms that are like, hey, we want everybody back in the office, and they'll interview a really great candidate, and the candidate's like, yeah, I'll take the job, but I need to have 3 days, at home or whatever. And the candidate has the leverage, and we're seeing, firms kind of acquiesce to this. So, really looking, around the country, maybe where you could, fly and be with the team, but not have to be with the team, the whole entire time. I think this is opening up this conversation. So if you're finding that for whatever reason in your particular market, you can't do what you do, but you want to, stay, your kids are in school, you don't want to uproot the family. I think really getting on these national websites, like a eFinancial Careers ends up being a good spot where firms, place roles. Of course, LinkedIn is, a great space for that, but really, try to look in the broader geography, see if you can find something where you could, work from home. I think that's definitely a viable option today. So you don't have to switch gears, you can stay doing what you're doing.
We have some more questions that came in. I think one you kind of answered a little bit about looking at other areas, but we have a question that said, besides fintech and wealth management, what areas are you seeing with opportunities that's in the Bay Area for CFAs?
Yeah, so I wouldn't say, kind of specific to Bay Area. It's just, if you've got this CFA, right, you've got this strong financial language. So, most of the time you're like, okay, well, what's the easiest thing for me to do, with that? And, I would say, a lot of folks that are tired of sitting behind the desk sometimes, we see a lot of folks try to move over into product specialist roles. Like they've gotten good at the communication side of the business. And so we see a lot of that investor relation product specialist, people wanting to do that. Manager research, right? If the stock picking jobs are drying up, there's always room, because manager research is so widespread, right? You can do that inside a consulting firm. So if you want to, work for one of the large, Wilshire houses, you could do that, or you can do manager research inside 401k types of DC shops, because they have to, do all that investment lineup. And manager research, of course, crosses over into all the high net worth shops, small firms to large firms. So I think there's a lot of opportunity in manager research. And I think there's a huge, hot button on the alternative side. I would be definitely open, to that. So I think, going to fintech and going corporate is really is the biggest departure, right, from what you're doing today. Even though people do it, I think, it's a harder slide, backwards. Of course, manager research seems more kind of realistic. Sometimes the brokerage houses, like we had, in Seattle, we had a really large mutual fund company, Rainier Funds. Manning came in, stripped it for parts. None of it sort of exists anymore, except a kind of a small institutional team. And all of those, there was a lot of CFA folks there that wanted to stay in Seattle, really kind of scrambling to figure out which direction to go. We had a couple that ended up in the brokerage industry. We've got, around the country, San Francisco, you'll get the corner office guys that have $1 billion, $4 billion or more in assets, and they're running funds, right? I mean, it's not institutional, but they're still stock picking. And so, I call kind of stock picking kind of the underground kind of investment community today, because there are a lot of spots where that's happening. It's just not happening sometimes in these big, huge, large, mutual fund houses that might not be in your backyard. So if a lot of that's happening, you see a lot of that. Okay, well, where is, Vanguard base, or where's Fidelity base, or these very large mutual fund houses? A lot of that doesn't exist, in the West Coast. And so you've got to figure out where are the pockets, right? Where's the underground stock picking community? It exists everywhere. It really does. It's just smaller teams, smaller groups, and you just have to get more resourceful in finding out where that's happening.
We have another question. Can you talk a bit about moving from buy side to VP finance roles on the corporate side,
Yeah.
i.e., not joining a corporate to manage events in treasury, but in a more strategic role?
Yeah. So what I would tell you is corporate's a good space. I mean, there's some pretty good money on the corporate side. And, especially when we've seen candidates go over to Amazon, I haven't been able, to compete. I mean, I know some markets are more kind of up to speed than others, right, in terms of compensations and salaries, but very large corporations understand comp on a national scale. And so compensation is fairly robust. So again, it's really, I think the best thing and the best way to find some of these roles is to, if you're, using LinkedIn and using the search fields, is, type in Amazon and CFA and see who comes up, right? And see what people come up within these firms and what types of roles that they're in. I think it's, really interesting. And then what you can do is you can, you have that immediate connection, and you can say, hey, listen, I see you have your CFA. You can see from that person's LinkedIn profile that they probably started at some investment firm. And you can say, hey, listen, I'm totally curious about, what your department does over here at Amazon, how you're using your CFA, or if you've been able to leverage that. You can do that with kind of any firm. I will tell you with LinkedIn, LinkedIn's kind of quirky in the sense that you can only do so many searches before LinkedIn, pops up and says, hey, you need to subscribe for our more expensive service to do all this searching. So if you haven't used advanced Google search, I would encourage you to use that. If you pull up all of their search fields, there's a URL field, and you can type in linkedin.com. So you can put in the same search parameters, but it actually doesn't affect the algorithm within LinkedIn, if that makes sense. I think you can do on LinkedIn also, I think you can reach out to 30 people a day if you're not paying for their service. So, I would encourage you to do that as much as possible. Try to pack in as many people to reach out to a day, because some people robustly use these platforms and some don't. So if you reach out to somebody, it's easiest to reach out obviously to second connections. Third connections become a little bit more difficult, but always include a note in there. So somebody knows why you're reaching out. If you don't get a response, don't take it personally. It could be just somebody hasn't opened up, LinkedIn in the last 3 years. So that's just the way it goes. So reach out to as many people as you can. I would encourage you to go in. There's a way to look at all of the folks that you sent a request to that haven't accepted your reach out. If it's been like a month or 2 months where somebody hasn't responded, start to delete those and get rid of them, because again, LinkedIn has an algorithm that said, oh my gosh, you've reached out to 100,000 people and nobody's getting back to you. So you kind of want to just kind of clean that up so that you can kind of be fresh in how LinkedIn is trying to target you to pay more for their service.
Well, Kristen, we are just about on our time, and what a perfect segue on this last question we have. How are our attendees able to connect with you outside of this webinar? And if they want to ask more questions or maybe set up an individual consultation with you?
Yeah, absolutely. I'm happy to talk with anybody that participates in these LinkedIn seminars. Always love to learn about your backgrounds and where you're trying to direct your careers. You can just connect with me on LinkedIn. Just send me a LinkedIn request. My email address is also visible on my LinkedIn profile, so you can just email me directly.
Great. Well, I just want to thank you for joining us again, and for our attendees. I hope you guys will join us next month for our fourth part of our career development series, Leveraging Your Professional Designation. With that, I want to say thank you again, Kristen, and to everyone. Have a great afternoon.
Great. Thank you so much.
Bye.